test. We'll have it break summarize it for us. Break down the steps he gives to correctly manifestation using his theory. Oh, that's vidIQ. That they're I guess it did it. See, yeah. See how much I got taxed on it. Yeah, see, the limit order stopped it. If I would have just had a normal stop in there, I would have got so cooked on that. It wouldn't have got me out until probably up here. Okay, let's pull up the fib here. If I was watching this, I might have faded that. Yeah, 70% retracement. It's also half back. And it tapped into that very low time frame area there. Let's get it cooking here. There's a chance though it could try to go up to like 80 though. So look at ES to see, it's exactly what I thought. ES was going to stay behind, not take out the high, create the cracking correlation to give us the air quotes energy. It seems like cracks in correlation are energy for reversals. Why, or I don't know why or how or what difference it makes, but it seems, do you guys think that's how I think of them, as like energy for a reversal? I never thought about that before. I think about candlesticks as energy a lot, actually. With like velocity and aggressiveness, speed. You have a beautiful cracking correlation now. And this little sneaky broadening formation here. Looking kind of sus. What do you think, Eric? Is this a legit one? I would really love to pick your... I think I tried to get you to that one day, to get you to like have you look at like 10 broadening formations and how you decide which one's like credible or not. That's my whole thing with them. I don't know how you identify them, but you're really good at it. Every time you're like, there's a broadening formation, I end up getting wrecked by it. Every time, I swear. Maybe it's recency bias, but I feel like it's like just about every time. Oh, was there? I think I saw ES had one. Yeah, there's a big, we're in a big one too, actually. Oh, the opening? Yeah, that one at the opening's clean. Super clean, actually. This broadening formation is, this one's scary because, like, this area needs to be redelivered down here. So when price is like breaking down here, I would not have expected it to I'm so glad I didn't trade. I would not expected it to do that and bust this broadening formation out. I just wouldn't have expected that. Alright, I'm in the red again. What's up with this? Does it? Are you talking about the one right now or the one from this morning? Oh, are you talking about the one above price where we're at? That's above us. Oh, yeah, yeah. Does it? It looks like it looks pretty clean, like it match up with it. It would make sense. Yeah, you can't really, once you get the eye for them, you'll start seeing, this is at the opening though. It's like every day. Whether it respects it or not, and like, you know, it utilizes it correctly is another whole nother thing, but the first 2 or 3 touches though are pretty much guaranteed. After that though is where I don't understand. Like it's hard for me to use this as an edge. I notice them, but I usually just get wrecked by them, honestly. I used to be able to trade them, but somewhere along the way I got punished too much for and stopped using them. Yeah, beautiful. And then price did redeliver down here. Yeah, it's thinking it would do. All right, went up, went down, and popping right back up. Save my stop here. Get me out, bruh. It looks like it's pretty obvious where it wants to go here. Oh, there it is. Try to get in quick so I can too much stuff on my chart. Hold on. It's giving me anxiety. I don't. People with a bunch of stuff on their charts, I don't know how they do it. It's too much for me. Like the trend lines everywhere and stuff. Ugh. They could be trying to fill the gap in or even up there. Whoa. There was our answer. I got wrecked on that. That was a $600, almost a $600 stop out. That's why saving your stop is extremely powerful. Because it doesn't, like right here's a good example. It doesn't get you out where you put your stop. It never does that. It does it where it stops moving. So Nasdaq on this push here, it didn't stop moving until up there, right? Like it didn't stop until right there. So it didn't get me out here where my stop was at 297. It got me out at 3 or wherever it was down here. Yeah, 5-second chart. So it would have been yeah, 292 or something like that. And get me out for almost 10 points higher than it initially wanted. Yeah, because I had my stop at the halfback of this. Yeah. So no, I guess it's not that much. It's like 5 extra points, but still. Okay, so I want to put in replay here real quick. I want to see what happened here. On like a 10-second. I might have to go to the micros to get the actual what's going on here. Because micros usually will have more volume, so you can get more structure if it's like kind of choppy like it is right now. If you go to the micros, it'll have more structure. Okay, so retrace like half of it there. I want to short it again so bad, but I'm not. I'm not gonna. Already got knocked twice. Really pretty move up there. No SIR or anything. It did take out the strong high, so I shouldn't have been shorting this really at all, honestly. Or at least should have waited for one time framing to end. Could have saved myself a little bit of grief there. There's no cracking correlation either, so I really had no business shorting that. Live and you learn. Did you? Nice, nice. Yeah, the 50% model works on the... It's just the bullish ones are a little bit different, I feel like. It seems to print that all the time. Okay, so now we do have a cracking correlation. Nasdaq has officially taken out the high there. Let's look at the order flow here. Maybe a 20-second chart. Oh, that's trade bait. Yeah, no, I definitely agree with you on that. Oh, that bounce there. Yeah, I see what you're talking about, Eric. Yeah, how it lines up with the balance area. Perfection. Yeah, so we got push 1, push 2. Is there going to be a third? These pullbacks are pretty deep, which is making it even more confusing. And I've been hesitating on the first one, like I got in late on it, didn't get the scale out, and then kind of bad timing there. I didn't get the scale out on gold either, like I was supposed to. That's a really nice trade there that I kind of wasted. All right, let's go to the micros because I can't get a read on the price action right now on Nasdaq. There's just not enough volume. I can't see which way, like, what price is, like, if it's respecting or... I can't drop down enough is what I'm trying to say. Okay. Let's see how deep these previous retracements were from the low to high. A little like 65, 70, almost 70. It's more like 65. So you had perfect redelivery there. See what ES's little sexy ass is doing. The targets to the downside are really clean. I don't doubt that we're going lower. It's just like, how long are we going to bounce around here? This is very standard to create. Now we've created a range, right? You have the opening and then came back up. Now we have a range. So which way is it going to break, up or down? That's the question. I would say that down has more with the 1 hour, 1 time framing. It's 30 minutes left on the candle. It can easily push back down here. But on the hourly, there's nothing to redeliver here. And there really isn't here either. So I think we have this area down there, the yesterday's Asia. All right, still bearish, same thesis. I just think it's trying to reach for the gap. Maybe even that low there. So I should probably go long, eh? That would make the most sense instead of just watching it go up without me. So would I short this? Yes. Absolutely. With this here? Yeah, I would absolutely short this all day. With a New day opening gap open. Yes, absolutely. So 2 pushes down and launch. I would expect like the same kind of behavior here. I just wish it would have went to 281. That would have made me feel a little bit better about it, but I think I'll start with 1 and put my stop down there and give it the room just in case. I know I won't let it get there, but that's where my stop needs to go. I'm gonna lie, it be pretty funny if now it's finally bearish. That's usually how it go. Oh damn. Yeah, my bad if I just no, you're not distracting me, bro. Never, dude. No, definitely not. Yeah, the gap above on ES, yeah. I'm aware of it. Great minds think alike. I was thinking that earlier. I was thinking that exact thing, dude. Yeah, I think I was just wondering that. I was just thinking about that earlier. Like, are they just going to keep rotating back up into the range and filling these gaps to the upside? Because we switched, we were making gaps to the downside and then not filling them all the way, which is bearish. But now we went into like we are filling them and going through them to the next one. So it kind of makes me feel like, you know, my thesis on Sunday was right. So that this is a trap. I am surprised though that it didn't make that one last push down there, because it seems like it definitely could have. Let's go check back on gold here. Gold and the indices usually move together these days for whatever reason. The weekly is green so far, but we're approaching the Wednesday, Thursday reversal period for the bullish beginning of the week, possible bearish end of the week. Yeah. Or maybe they want this to be a doji week. I was thinking that too. If they want to make it go back up inside the range. Yeah, it looks like gold's going to collapse here. We're going to add into this if I can get opportunity to. Just want to see it violate this doji and then sound like Donkey Kong. This is starting to look like a failure swing here. Yeah, very failure swing like. With the cracking correlation. And ES is ES already filled its little baby gap there. So that's why we're seeing ES. This makes sense. I think we'll still go up here with that information there, because ES already filled its gap earlier. Therefore, it makes sense why ES is lagging, because it doesn't need to go up there. But, and then what I'm getting at here is that because Nasdaq is being a lot more bullish and more aggressive, it's because of this. Probably it needs to fill the gap. That's kind of like my thesis here. That's why ES is lagging behind, kind of being a little like it always is. Putting the pressure here and kind of slowing Nasdaq down a little bit. All right, I'm gonna go ahead and with that information, I'm gonna go ahead and risk it for the biscuit here. Put my stop down there. Ah, son of a bitch. Not trading two accounts at once. I think that'll be the last trade I do that with. It's not benefiting me tonight. I'm too slow with this brain fog I got going on. So this high right here is that high for ES. Shit, if it comes back down here much more, I'm gonna add in a third contract, move my stop below that low there. Dude, looks like gold is still hasn't moved. I keep thinking it's like my P&L got bigger, but it's not because of gold. All right, as soon as it violates this balance here, I'm gonna add into it. This right here, as soon as it goes below that line, I'm gonna add another 5 contracts and move my stop down. God, Nasdaq is just really not pretty tonight. Even the 1 minute's kind of choppy looking. 2 minutes the only decent time frame. All right, there it is. Let's see if I can get in with that other account before it gets way too much. Perfect, came right back up. Uh-oh. Uh-oh. Make sure my stop isn't like... it's not in the best place. I feel like I kind of have like intuition here that's going to try to go like this. Yeah, son of a bitch. It's all right. That's last trade where I'm gonna mix the accounts because it's not doing me any good today. When you know what price is gonna do and you don't follow your own intuitions, kind of lame sometimes. So it didn't take out that low. It just bounced right back up. I'm not going to chase it up here. It's too much risk. This could be a low time frame SIR here. We do have the... not on MNQ. That's weird. MNQ didn't take out that high. I'm gonna short this, guys. I think this is going down. The MNQs, that kind of like, I think that's a clue there, because it retraced farther than the Nasdaq did earlier, but at quite a margin. This little baby SIR setup here. It's trading the wrong account. All right, back to the 3 minutes so I can actually read it. I still want to watch out for it when and if it taps into this area, if it tries to be bullish. Make sure ES doesn't take out that low. Which it did not. So when I saw M&Q not take out the high here, this high, it makes me think that when it retraced earlier, M&Q like went deeper up into here, probably like up into like there. It had redelivered and like satisfied it, but Nasdaq did not have that same. Oops, didn't mean to do that. I did not have that same retracement as deep into the gap. So my thinking is that that's why Nasdaq took out the high, because then it got up to that same area that M&Q did earlier. Therefore, that means that maybe it doesn't need to go higher. That's my foggy-headed brain thesis. We'll see if it's right. I think it's right. I've flip-flopped a few times, so it might not be right. I'm about done with this gold trade. It's just like I should be looking at ES and getting the information. It's just not moving. I missed the scale out. So looks like Nasdaq's gonna cook here for me, so I'll set an alert for below this low. If it goes back below that low, maybe I'll look at it, but it's just not moving. Yeah, beautiful 10-minute chart there on ES. We got 20 minutes until the 1 hour candle closes. Looks pretty bearish. ES definitely needs to come down at least to 536. Yeah, it's not a bad idea. Wait for that volatility. I'm gonna switch to the 10-minute here so I can actually see this shit. So this is also a strong high here. This is the strong high. So I don't think they're gonna try to. It could be some. It's a lot of could be's tonight. It's over analyzing the charts, spending too long staring at it is what's going on. I'm gonna stop analyzing it. I do this. This happens to me quite often, actually. But that's why I come to the streams, like the New York session stream. That's why I come and give myself only 15 minutes, because that's all I need to understand what price is gonna do. Anything more than that, I found I usually will start over analyzing and getting way too analytical, and like with my thesis is, because I like science and I'm always about thesis, coming up with a game like what coulda, woulda, shoulda, kind of what's the possibility. All right, here we go, guys. Should drop now. I think it's gonna bust a big move here, move down here. I think a lot of bulls were probably thinking what I was thinking, that gap was going to get filled, and their stops are probably right under this low. So when it cracks here, should provide a pretty good retracement if it does crack. Yeah, 20 minutes, sir. You're a wizard with your intuition. I am pretty good at it sometimes. Sometimes there it goes. Voila. Gotcha, bitch. See that, guys? That's what happens when stop losses are ran. Price speeds up. Does not reverse. Uh-oh. Looks like it half backed up baby doji there. Oh man, it did the dirty there. There was this morning when I was watching price. ES ticked this little. I'll show it to you guys. It's like a 15-second doji, and it led to the reversal. And I saw the doji. I marked it off. As I was like, oh, that's kind of a suspect looking doji there. And ES dropped so hard and hit it perfect. It was quite amazing. All right, so gold did cook. Some bitch. Okay. I'm gonna put on like two micros just to see what happens. But I don't want to have to manage it and stuff. Too much going on. Too many. That's 4 different trades. It's too much to manage at one time properly. Like I should be scaling out of this instead of looking at fucking gold. Yeah, perfect right there. Now I can't lose. Yeah, it's 1.5 ADR. How many are you guys thinking about risk to reward when you're trading? I know I wasn't when I first started. I was oblivious to it. It didn't even occur to me for the longest time. Yeah, you do. What about when you were new? Did you? I know I didn't. I was oblivious to it. I understood it and I got it, but I didn't actually think about it on a trade. I was never concerned about what's my risk to reward going to be on this trade. It was more like how much money can I make, and I'm just going to put my $100 stop loss there. I don't only want to risk 100. Minimal risk as possible, but I didn't understand risk to reward ratio and win rate and how they the smaller the stop, the less likely your trade's going to work out. So you have a lower win rate. You're trying to reduce risk, but you're actually increasing your losses by a multiple that's way higher than what you're trying to save. You're penny pitching. That's resulting in mega losses. It's just it's retard maxing to the full. This is what I used to do. Just retard maxing it. A lot of retard maxing goes around in trading, actually. I like that word. I like it. I like that. That bounce up there is crazy, right? I'm glad I scaled out. Tell you what. I could have re-add back here. But I'm honestly a little bit tired now and I'm not really super sure. Normally I would have added back into this a strong high redelivery. Solid slow SIR. Nope. Did not take out that high. Never mind. Let me make sure I've moved my stop and changed it. Alright, I'm gonna add back here, guys. Oops, I fat fingered that one. Put on 3 contracts, but I think it probably is. Probably alright. Nah, it's too much risk. Take it off. Gotta do the right thing for my future self that wants these evaluations. Like, it's fun trading with 3 contracts. It's a lot more dopamine, but it's not gonna be good for my future self. My future self wants these funded accounts, wants me to pass the evaluations, take them super serious, so I get them, and I can turn them into money. But the here and now side of me likes to play around with them and do a little bit of degenerate stuff sometimes. So I gotta watch that side of me and keep them in check. Super weird how I have to do that, but just being honest with you guys. Okay, so it did take out that low there. So this is a SIR setup. We're good. We good. I don't know why I didn't see that before. Yeah, that's the strong low there. So it's a SIR setup. Probably like a nice little 2 or 3 minute one. Gold's Chop City too. So usually we would just be starting the stream doing an analysis right now and be ready for the volatility that's about to hit. It's incoming here in a few seconds. You got the top of the hour, you got a new hourly candle, and then you got let me ask this club. Yo, what up, man? I've noticed that there's an increase in volatility right about now in the Asia futures market in Q and ES. And it's not like a random here or there. It's like every single night. It starts about this time and goes for about the next 2 hours. The volatility like peaks. Why is that? Can you research and find out? Is it because in other countries trading, they're waking up? Like, go through it and figure it out for me. Appreciate it. Motherfuckers are gonna rule the world. You better be nice to them chatbots, man. I don't doubt it. I really don't doubt it. I think they'll be ruling the world here soon. Ooh, good looking out, homie. Now you're stressing me out, Eric. Did it? See, that's what I'm saying. I almost would feel better about it. I don't think we'd be at war with Iran right now. I get Iran's bad, I get it, but you know what else is bad? Tweakers and fucking fentanyl zombies fucking walking around everywhere and homeless people everywhere. It's like bad here in Oregon. There's like homeless people everywhere. That's not good. That's very bad. Oh no. Alright, let's switch to micros here. Just to the tick stop me out. Like, literally, like, to the tick. 10-minute volume imbalance. Yeah, there she goes. Just like I thought. Looks uber bullish right now. Yeah, I might be offsides here on the reel. It's just that the swing low there is very clean. It's not respecting the balance on to the left here at all. It does have like an area it needs to redeliver. Hope I can get a scale out here before it pops back up. And if I wouldn't have added back, that's why I probably shouldn't have. It wasn't testing a strong high. No, I guess it was on the lower time frame. No, it was. Yeah. I just did it too early, I think. Alright. Where are we at? 1.3 is right in this area here. My mind wants to be greedy tonight. Like, every time I measure this, I try to go like a little bit more. There we go. Yeah. Get it, boy. Get it. Get it. Nope. A little dopamine rush there is very good. Gotta like that dopamine. Yeah, I do if I like they're really big. I like how you use them the best though, as like an indicator of like bullish or bearish. It's super smart. Definitely works. Honestly, the reason I don't, for the most part, is because I just don't want to be associated with ICT, bro. Not gonna lie, dude. That's really the only reason. I don't really like messing with them, man. I just don't want my, I just don't want to be associated with that demo trader at all. Any kind of shape, form, or fashion. It's like a direct opposite of what I stand for in life and as a person. It's just a direct opposite. But that's what people want. People want demo traders that lie to them and feed them a bunch of bullshit. That's what people want. So that's what people get. It's literally, you can just go onto Twitter, write up some of the worst advice you could ever come up with. Tell traders to trade with a 1R. Or tell them to trade with a half an R strategy. Be like, that's going to get you success, bud. And then blow up on YouTube and Twitter from your really bad advice. Get really popular, bunch of motion. Start a Discord. Make millions of dollars a month. Never actually have to prove you ever traded. Just say you do. And get rich as fuck. Like, that's literally the game plan. It's the... I don't want to get into it. It's just so dumb. It makes no sense to me. But retard maxing is on the loose. That's literally what saying trade with a 1R is literally like the most retarded thing you could do as a trader. It's your one lever that you can pull is like bigger than 1R to make it like you have the odds are in your favor of success. And they're just like, nah, don't do that. It's just crazy. It's retard maxing is what it is. It's like, how retarded could I be to make this harder for me? That would be it. That would be like one of the hardest things. Really weird, man. Yeah, use a magic box. Yeah, no doubt. TBM today was down on live stream. Then I decided to stop trading. Then in his Discord posted his evals passed but cropped out the accounts. That's what I'm talking about, bro. It's probably an old one that he wasn't even trading, dude. I don't know who it is either, but it's just what they're doing, dude. They're all doing it. Because why? They don't need to trade, dude. They just get rich as fuck by giving bad advice. I don't know if he's a bad one. I heard he's actually pretty decent, but maybe not anymore. I think they get kind of corrupted too. Yeah, so he's probably trying to make himself look better. Yeah, that would make sense. What? Did I add back into this again? with one while I was talking. I didn't scale out. What? Oh, it wasn't far enough. That's what it was. Now, let me get ready to save my stop and then call it a night here, guys. I've been trading. I can feel the tilt just like creeping up. With every swing back up, it's just like creeping up a little bit more frustration, a little bit more anger. I'm not angry or upset or anything. It's just I'm start feeling it. I've gotten really good at like recognizing the feeling of tilt. It's almost that same feeling when you're trying to, like if you have like in an engine or a machine, you have like a little bit of space to like tighten a screw. And it's like an awkward move, and every time you try to get it to on the thread, it like falls. And you like sit there, you keep trying to get it to thread, and it falls, and you start getting frustrated. That's the feeling. Like if I could, like, explain it another kind of, like, that's the same feeling. Yeah, I'm gonna save my stuff there. It might reverse there, but and then I hate that douchebag TT trades. He always is all like snarky and shit, and when he's on Twitter, in my comments and shit. So I asked for the scammers to prove it, that they can actually trade with 1R. So I said, these demo trading gurus love to push a low or even negative risk to reward ratio strategies. I said, I think they're frauds, claiming profitability while never trading on screen live. I don't think there are any traders in the game today with a risk to reward ratio of 1.1 or less. I say, prove it. I know someone that does well with a 1R strategy. No, you don't, dude. Who? And this dude said he proved it, but he just showed me his payouts, which that's not like look at how many people are getting like attitudes with me about it. They think it's good. They've been brainwashed to think a low RR. Oh my god, dude. They literally think it's a good thing. How is that? Can you guys help me out? Am I like, is it? It's not like rocket science. Like a little bit of logic and math will tell you the higher risk to reward ratio you have, the more likelihood you're going to have success. Obviously, within line, all in, all out strategies, like there's a line there, like, but it is definitely over 1.5R. Like, that's for damn sure. You guys have been brainwashed into thinking that 1R strategies are good. Like literally a 5-year-old, if you could be like, what do you think's the better way to make money if you were to lose? When you lose the same amount and you make the same amount, or when you when you lose and then you win, you make more than you would lose. Even a 5-year-old could come up with that basic logic. Y'all retard maxing to the max. Weirdos. Craziness, man. Oh, it did go up. I'm glad I got out then. And it went past the gap too. I think they do. I just think they're retarded. I don't think they even have like basic logic. Like, you guys that are in here have been filtered out of thousands of traders. Thousands. You guys have a logical side to your brain, or you couldn't be able to stand my content. My content would be just disgusting to you if you were like a retard maxer. It would put you off. You wouldn't like it. So you guys are like high logic thinking human beings. I think they understand. I just think they're retards, dude. That can't really think logically. Like, kind of like, I think they're like non-player characters. Kind of like they just like walk around the world, work their shitty job, and then some of them become famous influencers somehow. They fall into it, I guess. I don't know. Yeah, that's a bunch of BS, dude. He said some trading competition or something. You would need like a 90% win rate for a negative 1R. So by negative, they mean less than 1R. That means when you lose more. Unless you like unless it was a machine. Like, I'm not saying it's not possible. It is possible. What I'm saying is that, like, it's bad advice to give to any trader. Like, it's not something you want to do as a trader. Like, it's just not good. But if you're like you have an algorithm that does it for you, cool. Or you're super disciplined and like a 80-year-old dude, maybe. But because one loss is gonna, especially under 1R, one loss is gonna wipe out your gains from your last trade, and then you're essentially gonna take 2 trades to make up for one. It just becomes improbable with commissions, mistakes, errors, platform fees, evaluation fees, funding costs, all that added in together comes out to a lot more than 1R. Yeah, pretty interesting though. How people are getting. It's just interesting how people in herds kind of like operate. Like, all logic will go out the window because someone cool said it. I've never been like that, ever. It's not the way I've ever operated. Even as a child, I wasn't like that. I would constantly, when I was in like kindergarten, 1st, 2nd, 3rd grade, I would constantly get into arguments with kids. Just like constantly. So I don't think I was ever like that. Schools kind of like that though. If there's like a really popular person, whatever they think or wear, whatever becomes popular, it's I think it's because as humans we want to be included, and we want to be liked. I think that's what has a lot to do with this. So going against the current narrative, in some way could cost you that. You could get shamed, or someone could call you you know, all kinds of things. That's what I'm gonna go with instead of the retard thing. Yeah, maybe that's better. But it is some retard maxing stuff. It is really, really, really weird. Really strange behavior. Dang. Yeah, yeah, yeah. Yeah, but it's not like that's not like you're like, yeah, I get what you're saying. I do that sometimes too, but it's definitely not my strategy. It's not to like, I'm not like putting a limit order for 0.4 of an R. So if I'm risking 20 points, I'm not trying to make 5. That's crazy. That's what they're talking about too, which it's just the main thing about it is it's bad advice to give out to traders that are new. Because traders that are new have incredibly horrible win rates that they don't even know what their win rate is. They don't even know. They have no idea. They think they know. They have an idea based on their back testing that their biased back testing they did, but they really don't. No, it's probably like 30-40% for new traders, I think. Beginner traders that are still not getting payouts, probably 30-40%. If it was higher, they would be getting payouts. So that means that is guaranteed. If they try to implement that, they're going to fail. Just risk of ruin will eat that alive. Risk of ruin will eat any. I would argue risk of ruin will eat any 1R strategy alive if you play it out over 50 trades. You will blow up. That's how I should argue with them about that. I'll do that after this. When I bust out the risk of ruin, that they probably don't know about it. Alrighty, guys. I think I'm gonna wrap it up here before my voice goes out. Not a very successful night, but yeah, it is what it is. This is probably the short here. Hold on, let's take this short, and then I want to save face here. Like, it's not going above this high here, so. Yeah, hopefully not. It's half back to balance. It's pretty clean. It's a half back to balance, higher time frame SIR setup too. Yeah, perfect 80% retracement. I don't know if there's a cracking correlation though. Might be like the one thing it's missing here. $351, $351. $4 p.m. wick, 4 p.m. wick. So there's a little bit of cracking correlation there. Can you please talk a little bit about the probability options? What do you mean by that? Some days I just see it. You're good at calling price action out, bro. Pretty much every time you're like, it's going here, it goes there. Yeah, like pretty on point with it, dude, actually. Oh, like the like the statistics? Yeah, I can talk about that. I love talking about that. It's one of my favorite topics because it's so important. Most people just don't want to learn about it because it's not very interesting. So you're wanting to know about risk of ruin, which is a really cool stat that changed my trading forever once I learned about it. It explains why you'll have a success for some time and then you just kind of blow up out of, like, it seems like it's out of nowhere, but it's because your risk to reward ratio and your win rate aren't balanced correctly, and a set of losses eventually will take you out of the game. More associated with risk. I'll break it down to you. It's more associated with risk than, but win rate does affect it, and so does risk to reward ratio. It's essentially like, what are the odds of you with your win rate, your risk to reward ratio, your average risk per trade. Those three things together will then give you a probability of zeroing out, like failure. And it's really kind of when I was like, what? I just had no idea, so it'll be a good one to cover. Except I can't control the monkey on my shoulder. Yeah, that's a tough one. Isn't it weird now that you know where price is going? Like, you know where it's going. You would think that it would become, like, trading would become way easier, but it doesn't. And I think that another reason why knowing where price is going does not necessarily mean that you can trade either. Because that happens to me all the time. That was the first thing I said when I joined here years ago. I want to be able to call price action like JKT. Gotcha. Yeah, I used to post my callouts all the time. Pretty incredible stuff. What you're talking about on risk to ruin is big, important, super important. It is one of the biggest kind of eye opener things that you can learn. Just because of how telling it is if you have your stats. So what I would do is go into whatever platform you're trading on and get your stats, and then they have these little calculators you can plug them into. I'm gonna have Claude build me one that actually works real quick. Hey, I need a working risk to reward calculator. One that I can put in my position sizing based off of futures prop firms. So the issue is with the ones online is that they don't accurately account for the drawdown of your account being essentially the account size. If I have a 50K account and I have a $2,000 max drawdown, the account is blown at max minus $2,000. So asking me what my risk is based on a percentage of my account is not correct. Because then I would say something like 2% of a 50K account would be my risk. But that's not correct because it's not right? I need to be able to input scale outs, what the scale out with the first scale out would be with the risk to reward ratio. And I need to be able to change how many trades it takes. So win rate, trades, scale out, correct drawdown measures, and RR, risk to reward ratio. I want to be able to input those into like a system, and then it give me a graph showing the P&L over the set of trades that I selected using risk of risk. Let me give him a slide so he knows what I'm talking about. Risk. God, that brain fog is killing me today. So I want it to look like... he'll get the idea with that. Like, that Claude is... Like, I've experimented with a lot of different AIs, and Claude is on a whole different level. Like, it built this whole... in like 5 minutes, it built me a whole slide deck for that day traders video. It did that in like 5 minutes correctly. It didn't mess anything up. It was like the craziest thing I've ever seen. Because I usually have to like correct it, and like takes me like hours to make the slides, but it did it in like, it did this whole 40 slides. Gave me a script and everything. Like, it was just in like 5 minutes, and they're good. They're not like great slides, but they're on brand with the company, and like they're right. You know, the information was right, which is crazy. All right, I got sidetracked there. Sorry. My little kid drawing of my calculator and my chart. I've included a very basic childlike drawing just of how I would like it set up. The calculator input on the left, the chart on the right. Also at the bottom of the calculator, I would like the information on risk of ruin at the bottom. Bust it out. And this should be in a dashboard of some type. Here, I was trying to have the coding dude do it, but it's like a whole process. All right, while it's doing the calculator, I'll break it down to you guys. The calculator like takes it home though, and that way you guys can use it too, to kind of experiment with your own win rates and everything. I have a full video about it on my VTF channel as well. So risk of ruin is the probability that you will blow the account in a certain amount of trades based on a certain win rate and a certain risk reward ratio. I'm not sure what's up with that slide. Jeez Louise. Yeah, these are way old. I'm not gonna cut it. Very bad. Okay, so here, this is what I was kind of looking for, like a sheet that breaks it down. All right, so risk of ruin at a position size of 10%. So this is 10% of your drawdown. That would be in a 50K account. You have $2,000 of drawdown. That would be $200 loss. So this right here is showing that those dudes are so retarded. Like, even seeing this just makes me kind of laugh even more. They're retard maxing just off the chain. Okay, so here we have the win rate. I mean, the risk to reward. So 1 to 1, meaning you risk 100 to make 100. 2 to 1 means you risk 100 to make 200. 3 to 1 means you, I always do it the other way. I don't know why. 3 to 1 means you risk 100 to make 300. And then over here is the amount of the percentage of trades you win. And then what this is telling you, the odds of you blowing up with those two. So if you have a 50% win rate and a 1-to-1 risk to reward ratio, you have an 84% chance of blowing up. That's without tilt. That's just like taking your strategy and trading it correctly. A 2-to-1, gosh, they're so dumb. They are so dumb. A 2-to-1, you have a 4.9% chance. Big difference. Almost guaranteed, pretty much guaranteed, not guaranteed. A 3-to-1 makes it 2.1. So what's interesting here, though, is if you are a new trader, beginner, your win rate, I'm pretty sure, based off of all my one-on-one students I've had and working with, hundreds of different traders, pretty much mine included, when you're new and you're not getting payouts, your win rate is usually in the 30 to 40% area. It's just how it is. Because you're new, you make mistakes, you kind of hesitate, you get into trades late, you just kind of make you're still learning. So your win rate is usually in this zone. And you can see here that if you don't have a 3R strategy, you're pretty much guaranteed to blow up. Like, no matter what you do, you're just going to continue to blow up. Right? So it's 100% 1-to-1, 96 at 30%. So it's guaranteed. You're going to blow up over a set of trades. There's another calculator here that goes a little bit deeper. So what I figured out for myself, like the minimum viable risk to reward ratio for me to be profitable long term is 1.7R and above a 55% win rate. Anything usually under that, and I start struggling. Yeah, man, you don't have to wait for me. Remember we talked about this? You have the power. So this just gives you like a more extensive kind of and it's looking at it in a different way. So this is the probability of you blowing up if you have a set of losses in a row. We're kind of missing some information here, like what's the average loss. It doesn't really give you that information, but it's just kind of a basic way to look at risk of ruin without all the other math. So, this is showing us what the probability of taking losses in a row. The law of large numbers is weird, spooky type stuff, because it always comes to fruition over a large enough data set. Like, even if you try your hard, like, it's you can improve this slowly, but the fact is you're going to take, what I'm trying to get at here is like, no matter how hard you fight it, you are going to take losses in a row. There is no getting around it. So if you have a win rate that is 50%, you have a 100% chance to hit 4 losing trades in a row if you take 100 trades. So this is where position sizing and following the risk management protocol that I came up with is so important. Because if you're risking $500 per trade, you're done. Poof. Blown up. It's all gone. And I know a lot of you guys are doing this. How do I know? Because I used to do it. That's how I know. So if you're taking $500 losses, you're just putting your stop wherever you're not adjusting your position sizing. 500 times 4 equals 2,000. The account's blown, and there's 100% chance that this is going to occur. So at a 60% win rate, it's still 92%. At a 70% win rate, it is still 55%. And no one's trading with a better than a 75% win rate. I don't think that exists. Maybe for a short period of time or something, but I'm not saying that traders can do it, but I'm just saying I think it's very improbable that me or you are just going to do it. If we're really looking at it honestly and not trying to, like, not trying to look cool and shit. Like it's just 75% is a hard number to hit, honestly. Oh, damn, that was so quick. Okay. That was super quick. What? Hey, can you make this one of those file thingies so I can open it in a browser? So I can change the size of the font and stuff to make it more viewable. I'm on stream right now and I'm trying to do this on stream. No. It's perfect how it is. It's exactly what I wanted. So please don't change the size of the font or anything. I can change that within the browser. I don't need you to do it. Isn't that cool that I literally gave it the most basic ass drawing in a quick little breakdown. Like, this is my drawing. Looks pretty, it's exactly what I wanted. It's just amazing. It took it like 30 seconds to do it. Like, so if you want tools, and it's not like if you try to do Gemini or ChatGPT to do this, they would mess it up. But I can't zoom in yet, so I need to fix it so I can zoom in. Okay, why it's doing that? So position sizing is really important, but also is win rate. There's no real way to get around the losses in a row, because even like 65%. You have a 77% chance. So basically, if you want to be profitable, you have to make sure you're not risking too much per trade. And I even know some profitable traders that do this, that risk more than 500 per trade, and then eventually they blow up. But they just are good enough that the losses in a row doesn't come too quickly, and they're able to get payouts. If you're doing a risk to reward ratio properly and you're risking $500 per trade and you're measuring out your risk to reward and scaling out when you should and exiting at 2R, it will help a lot, because then a winning trade you're going to make 1,000 plus, which will then give you profits, which then will make up for the losses in the row, is what I'm trying to get at. It didn't work. I don't know, man. Something happened. F12. Try to make me do stuff, bro. Get out of here. You fucked with the font, didn't you, bro? Alright, I should be able to open the file here. Okay, so hopefully you guys get that. So just if some of you guys are new, I don't know why they always like, so a lot of people put the it just seems backwards to me. They put the reward on the left, like they would be like 2 to 1, but that doesn't make any sense to me because it's risk to reward ratio. It's kind of backwards. So if you ever see me, I do it the other way. I don't know. Warning, you are using the okay. There we go. Yay. Hold on, I just blew up an account. Let me see if it's still in the dashboard. All right, it is. Let me get the stats from that account that I just blew up, and it'll be a good. Oh, I forgot I was in a trade. Yeah. That's how it's done, son. What? Yeah. Boom. Shakalaka. I had totally forgot that I was in this trade. Very good. It's very good. It's cooking. Alright, so I'm going to go get the stats from the account I blew up, and then we'll be able to see why I blew up. It will be clear as day, and it will tell me exactly what I need to do differently next time. Checking your stats when you blow up is like easiest way to figure out what you need to change. But if you don't do it, you're going to lie to yourself, and you're going to... what happens is you will bury your head in the sand and kind of like lie to yourself. It's just, I don't know why. It disappeared already, damn it. hate how it does that, man. All right, so this one's like these stats. It's the account that I passed, and you'll see why I passed. It'll be like really clear here. So a 53% win rate, not horrible, not best, but each time I put a trade on, the expectancy is I make at least $129. Not bad, not great though, but not bad. But here's where what makes it profitable is my risk reward ratio is off the chain. So my average winning trade is 300. And my average losing trade is only 70. That's a scaling out. This is what I've been trying to tell you guys. The scaling out does this. This is normal for my trading. My profitable trading is the normal. But you're like, well, how is that if you're risking 200 even more per trade? Well, when I scale out and price comes back and stops me out, I end up taking a win, which then on the ones I don't scale out and I get a loss, it balances it out. So, instead of taking a full loss, I make 30, 40 bucks. And then a portion of my trades that happens, and then a portion of my trades it doesn't. But it's usually like 30% of my trades I get to scale out. Sometimes more, sometimes less. Which then reduces my risk by over 100%. By over, it's like 65% reduce of risk on average. It reduces your average losing trade by 60%. All right, I'm done preaching you guys about the scaling out thing. If you didn't do it today, after all I've been telling you guys, you are stubborn as fuck. You need to do it. Just try it. It will relieve the tilt. It helps in so many different ways. So that means I have a risk reward ratio of 4.2. How do I have such a high risk reward ratio? Is because I use the I already forgot the name. I just named it. I forgot it. So my framework for trade management, which is actually really cool. Adaptive trade management. So ATM, adaptive trade management, which that's what it is. We're adapting to the price action and adjusting accordingly. So let's go ahead and put this into our calculator here. We got, and then if anyone has a account that they blew up and they want to share their stats, that would be cool. So I could put it in there. Otherwise, we can just make some up. Okay, so we got 53% win rate. Risk reward of 4.2. Risk per trade 70. Let's call it 75. So we'll just go ahead and So a total of 4 point, what was it? Total of 4.2. So that would be Go ahead and make that 2 and then 2.2. This is cool. I like it. I dig it. Profit target 3,000. Max drawdown 2,000. Yeah, it's exactly what the slides told us. So here's the drawdown. This is like the variation that this is the equity curve distribution. And I don't hit the max drawdown. I don't get anywhere near it because of and what we're going to do is we're going to adjust this and make it, we're going to change something to see how drastically your chance of success changes. Now, if we look here, to be profitable with this trade management style, 33% win rate. That's all you need. If you take 10 trades, you only have to win 3.5 of them. Median max drawdown was 375. And then out of it runs it a bunch of different times, so 100% chance of success. All right, now let's change this a little bit. Let's have a little fun with this. Risk of ruin, 0 chance of it. So now if we start changing this, let's go risk of trade 300. And we'll leave the win rate where it's at, and then we're going to do the let's go 60%. Show the retard maxers that they're wrong. They don't scale out, so he didn't give me a way to change that. Hey, I also need a version of this that doesn't have the scale out. For example, I want to prove some people wrong about scaling out, and I need to show them what it would look like if they didn't have the ability to do it. So can you make me a new version that has a way to turn off the scale out, scale in, and anything else associated with that? Okay, so while it's doing that, what I can show you is like it becomes problematic if your first scale out is really low. So let's go ahead and say we got a half-hour target, which is probably what a lot of people are doing. Because I used to struggle with scaling out, I would do it way early, and it would be bad. I realized quite quickly that if I didn't make sure and scale out at the right point, I would blow up. Okay, so now you can see all I did there was just adjust the risk to reward ratio. I increased the win rate and lowered the risk to reward ratio down to the retard maxers, what they swear works, and all of a sudden they don't make no money. You don't make any money. It's flat. You never pass the evaluation. You just chop it around. You don't win. Yeah, so I increased the risk per trade. Let's increase the number of trades and see how this turns out over time. Do they ever make money? No. Let's re-roll this here and see what happens. No, the average median is they lose. I think, let's see here. So they have a 56% chance of blowing up. Not very good odds of success. That means one or two mistakes, you're done. You're toast. Okay, here we go. Now I got this no scaling in and out. Okay, so let's go with a 60% win rate, which is good. And then let's go with a $500 per loss. So we have a $2,500 drawdown. That's too much. It's max 2,000. There's no win rate. Oh, there it is. Yeah, and so you can see how this drastically affects this risk of ruin here. Risk per trade. If you risk too much, I don't think this is working right. This one worked. The other one worked right. I think you need to double check the math, because I increased the risk per trade all the way up and it still showed only a 30% chance of risk or ruin. Please make sure you research and get a good understanding of what risk or ruin is, the math behind it, and how it works. Sorry about that, guys. I didn't expect it to do that. Yeah, because if you risk $2,000 per trade, like it's not 50% risk or ruin. So yeah, the slider's wrong. Okay. I was gonna say, I was like, no way at 1R with the risk at 500 where they're gonna even chop around. What I would like is for it to just show the median and have a correct P&L on a trade by trade basis. So it needs to actually play out the trades based on the parameters that I gave it. If it'd be easier for me just to input the numbers instead of sliders, we can do that so it can do the math. It's up to you though. I shouldn't have to explain this though, right? Like, you understand distribution, how that works. I don't want to be mean to it. So the risk and ruin math is kind of interesting. So it's very complicated. Let me give it to it. So it calculates the probability minus losing probability, units, capital available, bankroll, blah, 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 blah. All right, any questions so far on that? No. I bet you I'm still not at, yeah, I'm still in drawdown. I was really close to blowing that up. Does that make sense, Frank? Which will make more sense when the calculator actually works, and I'll give you guys a copy of it and you can play around with it. Once you play around with it and kind of experiment with what works and what doesn't, it can help you, you know, come up with your own, kind of framework for how you want to manage your trades. But you have to manage them because it makes such a big difference. However you want to do that, you can spend the time tweaking or you can run with mine. It's up to you. But you need to mitigate your risk. You need to ensure that you have a stable loss, and you're not throwing darts at the barn, right? And you need to be aware of it. I think that's the most. There's very few professions out there that are just winging it. If you want to be, compete at this level of trading and like with prop firms, you're gonna have to execute and do things at a high level. I just think that's just what's required these days because of the rule sets and the amount of. It's not how it was when I first started. When me and Lupton and Eric started, we had very lenient rule sets compared to what you guys are trading with. How many R is you trade right now? Let's see. Not very much. I don't even think I can scale out yet. Because I put so much risk on because I wasn't going to be at the... I added on. Let me see where I actually entered on that. So my original entry was very low risk, but it's big RR. It's a good question. I probably should have scaled out instead of adding in. When I get talking, I start doing things like without even thinking, just adding in, scaling out. Yeah, so right there to there. Hey, get out of there. So right here was at a 4.7 R. And we have a cracking correlation, but I think we're good. This AI is just so cool. And this isn't even the good one. The coding one that I was going to use first is way better at doing stuff like this too. It makes you only imagine. Yeah, I know. It's too late. I should have done it like 3 minutes. I should have scaled out instead of adding in. It's kind of too late now, though. That is my conclusion. Hopefully I get lucky here and it continues. But please tell me, guys, like, I don't have to keep going down. Like, let me know right now. Do you understand the full implications of not scaling out versus scaling out? Do you understand how much better it will, how much better your trading will be? And that you'll probably be profitable if you do it. Do you understand that? And you, by choosing not to do it, is resulting in you not being profitable. But if you wanted to get payouts, you could just follow the rules that I give you, right? You understand that, guys? If not, I'll go over it again so you guys get it. Because a 33% win rate, that's a very low win rate needed to be profitable. Very low. That's worse than flipping a quarter. I know it goes against your nature, like scaling out, but it just, the math is, it's too good. It makes too big of a difference. Yeah, there could be for the final exit, definitely, yeah. Yeah, in general, yeah. Well, no, not technically, because it should, if you're on a higher time frame, you should risk more, and then you'd also get a bigger reward. No, fun haver, that's not what I'm saying at all, dude. Well, partly, that's what I'm saying. I think it still comes down to sizing. Yeah, exactly. How many contracts you have on and everything. No, not break even. Nope. Break even ruins it. I'll give you guys the slide with the rules again, so you can do yourself. But I'm just sick of talking about it, dude. I just know how important it is, and it, like, really, like, legitimately is the difference between a lot of you guys being profitable and unprofitable by just doing it. So I wanted to just make sure that I presented you with. So my job, I believe, as a mentor to you guys, is to try to present the proof I have in a way that is so undeniable that you implement it, even though it goes against your nature and you don't want to do it because it doesn't feel good and your greed sets in and you want to, like, get as much profit as you can. Like, my job is to present it in such a compelling way that convinces you to change. And I just want to make sure that I've done that, and then I can move on and I don't have to talk, because I'm sick of talking about it, honestly. Okay, it messed the last part. Let me fix this. No. But these tools are so cool. Like, it just, like, pops everything out of an image so I can move it around. Isn't that cool? And another thing is that other people are going to tell you something else, and they're going to tell you to do it a different way. So so when I did the data for this, it was on a 1 minute close. Implement 1 minute, one time framing. Once it reaches a target of at least 2R, preferably redelivery area, and then at that point you'll implement one time framing on the 1 minute chart. Exit when one time framing ends with a close above previous or below previous candle. And this will get you extra. I already explained it. I'm not going to explain it again. Unless someone's new and they haven't heard of me say it before. I guess I do forget that there's some new people come in and they probably haven't heard me rant about this shit for the last 6 months. So maybe it's not. Maybe it's good for you guys to hear it. I don't know. And then this is the adaptive trade management is what we're going to call it, because that's what it is. It's adapted. It's adaptive, dynamic. You can call it dynamic if you want, but I just like it adaptive trade management because it stands for ATM. That's pretty much what it will turn your trading into, is like an ATM. Even if you have a horrible, even if you could, I like a 33% win rate is really bad. That's worse than flipping a quarter. That is, that's about where beginner traders start out at, like with all their errors and everything. So that's pretty much what I'm saying is like, it's pretty hard to mess it up as long as you're not over risking. Over risking will kill it though. So you enter in with an even number of contracts, whether that be 4, 2, 6, 8, whatever it may be, but you need to be able to split them in half. And then you're going to get the risk to reward tool out, just like I do, or measure it ahead of time, put a line there, and then take half off at 1.3 R, which means that if you risked $200, you would profit $130. Bank it, no exceptions. Leave the stop where it is. So I did testing with this, and the break-even stop kills it. It increases the loss by too much. It decreases the win rate by too much, because there's so many, like when you get full to target, implement one time framing, you get a whole bunch more profit. And every time you move your stop to break even and it hits your stop and it doesn't go to target, that decreases your win rate and overall profit and increases your losing rate because Nasdaq's so volatile, it does it too often and too much, and it sucks too much profit off the table, and it ruins it. I didn't test like an all-in, all-out strategy with break-even stops to break even. I've heard a lot of gurus say that's the way to do it, but we all know they're also going to tell you to trade with a 1R strategy too. So, I mean, shit. We'd have to run the numbers to see if it's. We'd have to run the numbers. I don't believe after that, I can't believe anything these dudes say. It's just so. It's gone too far. Okay, cool. So we're going to go, let's even say with the 50K account, let's even say you like push it to 400. 400 is your average loss. What in the world? Oh, that's the full, that's the RR. So, let's see, let's test it. So, no, we want to go negative. So let's go 0.75 R. Did he really mess it up again? Oh, that's the win rate. Okay, there we go. Risk per trade, 200. It's not working. Let's go back to the one that worked. The first one worked. But you guys got the risk to reward thing. What was I? Oh, I was gonna show, because I think there's some people here. I don't think I talked about this on the. Let me upload it to Canva, so I don't have to keep pulling it up. Oh, how annoying. There's this one slide I wanted to show you. So didn't upload them all. No, 1, 2, 3, 4. Okay. So for you guys that weren't here, so why doing it this way works. Half your losers pay you instead of 30%. Instead of a loss of 200, you take a 30% gain. Your drawdown will last 2.4 times longer. It takes a much larger set of consecutive losses to blow you up. At a 60% win rate, I don't know why it says that. That's not true. Because either a 60% win rate would be profitable, and it would be very hard to mess it up. I think it's what's saying. Leave the stop alone. The one that matters the most. Leave the stop alone. Moving to break even after you scale destroys the whole edge. The plus 30 outcome is what doubles your survival. Give that up, and you are back to all in, all out. Modeled my own trade distribution, not a universal claim. 50K account, 2,000 drawdown, M&Q, commissions concluded, 200,000 simulated trades, 1,500 simulated trades per data point. Your numbers will differ. The direction will not. Okay, so with the strategy that the ATM strategy, the break-even rate is you only need to hit an 18% and you break even. So reach the payout almost 100% of the time following this strictly. So this shows percentage of payouts based on the win rate. So if you use the strategy, the ATM strategy, 30% you get paid out. 30% win rate, you get paid out. 35% win rate, you get paid out. All in, all out, nope, 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 nope. They don't start unless you're over 50%. So this is how big of a mass it's just, if you think about this, like compare two ways of trading, this one is so much better. It's just not even like, it's not even on the same level. It's like a Ferrari trading and retard maxing trading. All in, all out to me is like retard maxing. Like why would you do that? Why would you watch it almost hit your take profit, and then I've seen so many influencers do that where it's like it almost hits their take profit, comes within a point, and then doesn't hit it, and they take a full stop out. It's like, what? So if you trade all in, all out, you have to take 3 times the amount of trades. It takes 3 times the amount of time and 5 times the amount of evaluations to have the same success. Pretty crazy. So it has it's pretty good, 21% increase in profits, 21% increase in profitability, 17% less volatility. Those are big trading numbers, guys. That's to think about ways that you can improve your trading. Like a 21, imagine you could find a strategy that has a 21%. You would always choose that strategy, would you not? If you had a strategy that had a 60% win rate or an 81% win rate, which one are you going to take? That's pretty much what this does. It takes any strategy and increases its profitability and your success with it by 21%. That's nuts. Oh, this is just expectancy per trade and by the win rate. Okay, so all in, all out. This is just showing like the max drawdown and profitability and how much more profit you can make over a set of trades. So this helps you the most when you're not trading very well. Like it makes the biggest difference because the low win rate pretty much almost guarantees failure, right? But if you trade this way, it can make up for a poor win rate. Let me say that again. Doing this, guys, can make up for a bad win rate. And it's not really that hard either. It's not like it's super difficult to do. It just goes against your that inner degenerate on the inside, the greedy guy on the inside of you. I have him. Like you saw me not scale out here. And I want to get back my drawdown, so I didn't do it. You're gonna have to fight that dude. But once you get used to it, and you'll get used to it, and then when you don't scale out, your stress will rise. Because once I scale out, I don't have the risk is gone. I can't lose the trade no matter what. The whole reason you have anxiety and feel some type of way about it is because you don't want to lose, right? So that the scale out removes that. You always hear me like, oh, I wish I would have scaled out. You never heard me ever say, I've never said, damn, I wish I hadn't have scaled out there. I have never said that. It's always the opposite. I wish I would have. It just always pays off. And then once you get good at it, then you can do what I do is add back in on pullbacks, sell as it goes your way at 1.3R, comes back to near your entry price, add back in, and then 3 trades like you saw me do today with that early afternoon trade. That was one trade, but actually I took 3 separate entries and 3 separate scale outs. So that should help you with the greedy guy. If you just like think about that, it should help with him. We went over that already. Yeah, this is true. Every struggling trader blames the entry or the strategy. They never think about the trade management. They just go on to a new indicator, new strategy, new guru, and then keep getting the same result. Probably because they have a low win rate because they're still learning. The reality trading that other way is you can still be right more than half the time and still lose money. That's crazy. Yeah, so 21% more profits from the same exact strategy. So on average, you'll have 2 big wins with the out of 10 trades, you'll have 2 big wins. And then the 2 losses and the scale outs. Whereas, I'm missing a slide here. So the big thing is to take from this is once you scale out, a loss is essentially becomes a win. That's why whenever I give call outs, I'm always like, your risk is your risk. You could take a losing trade while I'll take a winning trade. I'm sure people hear me say that and they're like, what is he talking about? When I say that crazy, outrageous statement. If I was to give you a call out, I could take a win on it, a small win, while you would take a full loss. Like, what? It's because of this. Yeah, that's all of them, I think. Any questions on it? So I can just leave it alone. I don't want to talk about it anymore. Sick of it. If you don't get it by now, there ain't nothing I can show or tell you or prove to you in any kind of way. You are unwilling to do it and not open-minded to the idea of it, which is fine. I was like that too. You'll find your own path in your own way. But it makes no sense. Logically, it is very unlogical not to do it. But I get it because I did the same thing. I had to figure it out on my own way, so my own path. But it's a long, hard, grueling, painful path that I'm trying to save you from. So I hope you don't take the long, grueling path. It does have some upside to it, though. You become your own person, and you can look back and say I did this, and but that doesn't. We're here to make money. I think if you want to make money, what I just taught you is the way to do it. Obviously, you can trade with the 33% win rate and still come out on top. Yeah, the whole maxing thing. I saw some dude who he wakes up pissed on his couch, and he wakes up, pisses on his couch, grabs a cereal, pours it just making a mess everywhere. He goes outside, skateboards a little bit, pissing on his car, and he's just like, I don't think about anything. I'm retard maxing. And immediately I saw that yesterday, and I was like, yo, that's these dudes. That's the gurus pushing Lucid, the worst prop firm in the world with the most combined rules ever put together. That's the best prop firm in the world. It just made me instantly think about them. And then we got the 1R people talking shit. It's retard maxing the full. It's like pissing on your own couch, just retarded type stuff. So that's where it's coming from. Dude's pretty funny. I don't know if he actually lives like that, but let me show you. It's a pretty funny video. Retard maxing is a meme coin trader. I think it's the dude that came up with it. The core philosophy of retard, it's just like them, dude. Zero research, ignoring all red flags, hype, mid-twit, which is like Twitter delusion. Yeah, it's exactly what I was talking about. I'm looking for the video of the dude that came up with the retard vaccine. A really skinny looking, fentanyl type looking dude. I think he trades meme coins. Pretty sure his name is Jake something. he, in the video, just does some wild stuff and is pretty funny. Can you research and find the video of people explaining retard maxing? And they skateboard in the video as well. And no, maybe it was rollerblades. This is ridiculous. Yeah, no thinking required. I think it's hilarious. It's a good way to make fun of the look maxers too. No, I can't find it. When I come across the video again, I'll share it with you guys. All right, guys, let's finish this trade up here. It's taking forever. ES is almost at the target there. So very nice trade though. The huge risk to reward ratio, original risk to reward ratio here. So my original entry was at 29329. So I think I'm at max profit there. No, this was the account that was already at 1500. I wonder how I didn't blow the account then. If I'm at plus 2000 now, I guess I only had $300 of drawdown and plus 300, yeah. Yeah, 29, 28, 29. Huge trade, 6R trade. And I'm looking for price to come down to half back of this area. But actually, I think it's more likely to tap into this little consolidation here. See if it shows up on the 1 minute. Yeah, I think that's the last bounce before that move up. But we got to watch ES as well because it could... that is like the first pullback of that move up. So once ES gets to target here, we really got to watch this bitch. So probably be there as well. Yes, sir. So we still got a ways to go. Now I'm gonna get into like hyper mode here. Because we're really close to redelivering. So strong high, low time frame, strong high test there. You must close the micros out here. I got enough profit. I can go back to NQ here. Shit, there's such deep pullbacks. It broke that low time frame strong high. And let's make sure that Nasdaq has the same target. Yep. Da-boom. Da-boom. Not very far away. Is a high likelihood it. It did just hit the top of it, That's the open loop. Yeah, so there are our targets. So we had a nice little cracking correlation there. If it breaks, I'm going to get out of it though. Because with 2 contracts up to the top of that strong high is pretty far away. Yeah, it's 260. It's 17 points, too much. Gold's still pumping. It's almost the target there. Remember, I put that target up there. It's like that. It could go up to there though. And fill that gap and look at it. Just seeking that gap out like a champ. Amazing. Absolutely amazing. Just very cool. And then I need to remember the 4 p.m. Oh no, that's not a. That's a new day gap, Asia session gap. Whoa. I don't know why all of a sudden I got super lazy. I think I was frustrated with how big of a move it was, and my profits not having got past the count. The problem here is that this just closed the loop, and anytime that happens, you do tend to get rotations. You guys notice how I turn off the bid-ask spread and the candles chill out? They don't move around so much. So if you ever like the Tradeovate kind of data where you see there's more information in the candles because they move around more. All you got to do is just turn on the bid-ask spread and it will show you that, like the up and down, a lot of movement in the candles. When it's kind of choppy, like the candles like lower volume, I don't like to have it on during Asia session though. Alright, I'm about to get out of this. I guess the whole move's been slowed down like this, but I don't want, if it pops up, it's not good. One of them is probably going to make a crack in correlation here. I think it'd be ES, because ES has the little area above here. But they both have there, and a lot of pushes down. Let's look at a 10-minute here. Damn, I'm still not allowed to trade on Coinbase. That's all right, guys. I'm gonna wrap it up either way. If this doesn't go here, if it does, it's been like a 3-hour stream, so I pretty much just gave back all the profit that I just earned because I'm tired and I wanted to hurry this up. My hope was I could add in size and then it would go down there quickly and then I could just be like, yay. The stream over. Not that that matters. None of you guys care if I end this trade profitably, so it makes no sense. Oh, I still got lots of drawdown. I didn't realize that. I still got lots. No. It's very bad. Order flow is looking pretty bullish here. We just had a cracking correlation there. ES took out that low. I think ES is going to try to pop the top here while Nasdaq doesn't. That'd be my guess. Hopefully not, but I want to set an alert for gold here because I think this gap fill trade out of this will be the really big winner. I just got to find the 4 p.m. price and make sure we didn't already tap it. No, I don't need to do that. I just... So New York session hours, this is when they change it, not Asia session ones. So the 4 p.m. price had already had reached into, but that's a different gap, so it doesn't make any sense. So buyers bought, sellers sold, buyers bought, sellers sold, buyers bought. Still ping ponging here. I think we're good though. Yeah, maybe not up to here. Has the same area that Nasdaq or ES does too. So this high led to new low, so I'll use that as my stop. All right, there it is. Yeah, there goes Nasdaq, son of a bitch. Alrighty, guys, I'm gonna wrap it up, or I'm gonna go into straight tilt. Any questions before we wrap it up? Give you guys a chance. Any of you guys on YouTube? I think this is on YouTube too. If you guys got any questions, I'll give you guys a second to ask them. I'm not gonna answer all your questions in the chat because they're probably old. You guys just here on YouTube, you guys have a horrible retention rate, like children. You can't. The only average view duration is only 8 minutes. Y'all are weak sauce. Y'all are weak. Not my type of people. You ain't got what it takes if you only got an 8 minute attention span. Isn't that crazy? Only 8 minutes. You'd be surprised though, like videos too. Like it's pretty crazy. And that's with a pretty good data set of 240 people. That's pretty good data set. They want to see that land. Oh shit. Oh shit. That's true, huh? I bet it's probably a really good investment, actually, dude. I could probably never have to actually trade again. But fuck, I'm buying a Lambo, dude. You saying that's actually very true, dude. If I bought a Lambo, I probably wouldn't even have to trade anymore. Right? I don't think I would have to trade anymore. What up, Zero? It's been a minute. Where you been, bro? What you been doing? How you been doing? You're not trading ICT concepts now, are you? I swear if a dude like goes missing for a little bit, he comes back, liquidity it up, trading ICT concepts. Unprofitable as fuck. Wondering what happened. I was getting payouts, I just don't know what's wrong. I can't understand it. Oh, nice, nice. That's good. Good vacations are good. Super important. So gold's totally rejecting there. Yeah, so I'll give you guys on YouTube like one more second to ask good questions. Oh, that's all fucked her up. Nice, nice, nice. Bro, you should check out the as soon as Coinbase on I don't, maybe they're not gonna let me do it anymore. Maybe I made too much money and I don't think that's the reason why. I think it's something's wrong with their platform or something. I wanted to show because I think you'd be good at these too. You pretty much anyone that understands how we trade, I think could just clean up with the prediction markets. Like, look at my profits from last night. It's super crazy. I guess I could just click the video and show you, right? Okay. Start the video, so plus 900. The failed is like when you try to exit the trade and the price moved too much and it won't accept it, so you have to re-input it. Plus 600. Plus 742. Plus 828. Plus 730. Plus 582. Plus 352. Plus 1,273. And that was only like the last, like, I think I had a loss there right before there, so I didn't want to show it. But yeah, so that was only like, last night, just the end of last night, whenever I posted that. Coinbase's prediction markets, dude. Like, I have a video here where I traded it. Let me show you. Alright, so I enter in with $250 there. I'm betting that price is going to stay below the line. I sped it up really fast though, so hold on. So the way it works is you bet that price is going to stay below or above the line. Is it going to go above the line or below it? Price is already significantly below the line. The chances it's going to go back up there before it goes down more is very unlikely. And what you'll see here is it just needs to go down and I can cash out. So I put in another $150 there. So I'm all in for like 3 something. And then I put in a $500 total right there. Damn, I sped it up way too fast. Yeah, so it was like literally like 30 seconds. Really no risk. The only way I could lose if price went all the way back up to that line, which that line's like a full 15-minute candle. Of course, if you stay in the trade and continue to let it cook, that's when it can be bad. Like, because it could pull back over time, but if you keep the time on your side and don't get greedy, the only time then I lose is when it like goes against me, and then my P&L goes too negative too fast, and I get greedy. I don't want to exit. So they have it on Phantom Wallet too, where you can do a Solana, same kind of thing, but not as clean. Like Coinbase it just works really well for some reason. It's only 15 minutes, yeah. So they have 5-minute ones, hour ones, and 15-minute ones. Is that the same kind of thing? I've been looking for another platform. They essentially, like, the best way to explain it's like a covered call, the way it acts. Like, you have a max profit that you can make, but there's always, I notice, like, it shows everyone entering and exiting. There's always some degenerate, even if it's like the odds are like 1%. There's always some degenerate trading, hoping he'll make a 50x on a trade that has a 1% chance of happening. There's always some idiot like that. So that's why I think it's like picking up free money as long as you're just like getting in and out. Did you? Same kind of thing, huh? Why'd you stop? Did you get greedy and blow it up? I had that happen to me a couple times. Because you'd be like, oh, I'll just hold and get, because it's really gamified. The little line chart, the expected P&L, and you see like your number, oh, I could make 1,200, or I could just get out right now and make 300 real quick. So it messes with your head a little, and they do that on purpose. So you'll try to stay in there. I pulled out 1K, then burned the other, then bought steroids with some of it. Where do you get the steroids at? I would like some. Oh, this is like pancake swap. Can you exit early? Yeah, and Coinbase you can exit early. I wish I could get, like, I would love some actually. Straight to the dome, straight in the nick, dude. That's the way I'd be doing it. Straight in the nick, dude. All right, yeah, I'll check this out. And for you guys that used to trade meme coins with me, what's their face has it, but I didn't really like it because they didn't have a Bitcoin one, and every time I tried to exit, it was kind of slow and it wouldn't get me out. 8. 8 sevens is retarded. It's not good. Hold on, I gotta turn on the stupid VPN. But Coinbase, every time I try signing in, it won't let me do it. Yeah, I haven't tried from my computer. Oh no, I'm not holding any of it, no. Definitely not. Definitely not. Open position. So here's the BTC 15 minute. Yeah, see, it won't let me do it. Temporarily disabled. Why? I would like to know why. They don't tell me why. But anyways, I just use a trading view chart. So this one ends in 41 seconds, but it's much better on the cell phone for some reason. Let me show you phantoms. I'm sure it's more like it looks like they're hiding it from me on here. I'll show you on Coinbase then again. Okay, so gosh, it's so ghetto compared to the yeah, this is whack compared to the here we go, I found it. Oh, you can only do it in your wallet. All right. I just want to show you what it looks like so you can see how easy it is. Because you can exit whenever you want. That's what makes it really... So I think this is the platform that all these companies are using on the back end. Hey, there we go. Yeah, so they have 15-minute ones, hourly ones, daily ones, weekly ones. Hey, here we go. This is what it looks like on Coinbase. So there's 12 minutes left, right? Bitcoin is already down probably quite a bit from... Did anyone take that gold trade? I was going to get another count, but I forgot. NQ did reject there, and that's crazy. But anyways, let's look at Bitcoin. 15-minute chart. Use the balance areas. Like you can tell here, it just redelivered this. It didn't quite go to half back. It has a big area above that needs to be redelivered. This candle just opened, so this could be like the wick of the candle. And right now, if I wanted to bet up, so that means I would get a 54% return, or 43. But either way, 43%, and you only have to hold it for a couple seconds. Once it gets back over the line, that number will increase. Each one of those is like you can picture is like $1. So if you were to bet down right now, like let's say you price was actually going to go down, and it was just pulling back to redeliver real quick while the candle is still forming, you would get 70% on the dollar, right? So that means you would get a 70% gain. If you put up $100, you would get 170 back, which is crazy considering it doesn't take very long. So you see Bitcoin's redelivering higher with the redelivery strategies and how Bitcoin follows it like to the fucking T very well. Makes it pretty easy. Like look how it redelivered right here. But yeah, that's the, look at that. It's the same thing as Nasdaq. Very, very good. Alrighty, guys. Oh, with ETH, that was just because that one trade, but I usually do on Bitcoin because there's a not a liquidity issue, but like when you go to exit sometimes on ETH and Solana, it doesn't go through as much. Like that's why you see all of the failed orders, failed, because it just didn't go through. Alrighty, guys. Yeah, I'm super pumped. You know what that means, bro? You mean that there's a free money at hand, dude. I only get excited like this when something major comes around. Alrighty, guys. I'll see y'all tomorrow. Peace out. If you guys want to join the VIP, I'll give you guys the link. I think there's 2 or 3 seats left open, not very many. I opened up, some people were complaining last week, so I opened up a few more. I opened up 7 seats, and they're almost already all gone, so I would not wait. I'll definitely get on it. If I can find the link, there it is. Live streaming like this every single day. And I'll see you guys in the charts. Peace out. Have a good week.